Welcome to the Real Money Show, the number 18778 silver and the website guildhallwealth.com. If you've been watching the gold and silver bull market, you've probably been listening to the show as well. Things have been going very well. Jerry, what are we up this year? My name's Jeremy Wiseman. I'm joined by Jerry Karaya. It's
Hello.
The Real Money Show. Let's get started.
Talk about real money.
Silver's up, I think, 60%. Is that year over year? That must be year over year.
Year to date.
No, 60%?
Yeah.
And gold's up 46?
46%.
It seems like there's a bunch of narratives converging here that are pushing the price higher. You have unpredictability of what's happening in the world. You have BRICS nations who are looking to utilize their dollars but use gold as an entry into being able to use those dollars. You have central banks buying, as everybody knows, ad nauseum, we've discussed. But the reason for is, again, uncertainty, getting away from weaponized dollars, etc. And it looks like eventually we believe that in the quote-unquote golden age, that gold will also be the answer to these things. And then on the silver side, again, it's the people's gold. It is cheaper to buy. People are waking up to the pricing. I think the banks apparently are also getting involved on the mining side, maybe even the ETF side. You also have all these things that have happened already this year. Bunch of silver being moved over from London vaults. We are viewing it. I'm having conversations with our clients this week as sort of a geopolitical big move where the power projection of the British is being lost when they lose their physical gold and silver, because just like you weaponize the dollar, you weaponize the vaults over there too.
Watch this story.
So a lot of things kind of happening all at once, and that could also play into, I think, what we really need to discuss is manipulation in the market. In the past, silver would go to $50. The the COMEX would change the rules. Screw you, Hunt Brothers. You're out of this market, and then in 2008, for those who followed, it was Lehman Brothers collapsed. They were holding the short position. It got moved over to JP Morgan, that they were supposed to unwind that position over a 2-year period. I think it took them 10 years. So that position doesn't exist, apparently. And there's not a big motive for manipulating this market. And now we're hearing that they want to support the ETFs, because a couple of years ago, the ETFs blatantly said, we don't have enough product.
Mm-hmm.
So you have a floor being set on the market. So let's talk pullbacks. How low is low, Jerry?
Well, we've seen a big move. I think one of the big anxiety pushes this week was government shutdown. We've seen Spain without a government for the last 18 months, yet their jobs actually improved. They found a lot of jobs suddenly in Spain, and their GDP grew. So this is not an argument for no government. I think it's just an argument for less and less government, which is a big fear factor right now with a lot of Democrats in the U.S. government, as we are now experiencing and witnessing a U.S. government shutdown this week, which further pushed gold and silver to all-time highs. Silver approaching all-time highs. We're about $1.80 away from all-time highs. We saw a pullback today, very timely. I think the U.S. really needed this. I think the Federal Reserve really needed this timely pullback. So retreating from all-time highs they hit earlier in the session yesterday after the Federal Reserve Bank of Dallas President Lori Logan came out. They wheeled her out in urging caution on further interest rate cuts. So anytime they urge caution and pushing back against cuts, what happens? The U.S. dollar starts to push a little higher, and gold and silver, which are inversely correlated to the U.S. dollar, has a little bit of a reprieve and a pullback. Call it a If you're a trader, sure, you want to maybe take some profits and jump into your depreciating currency. However, if you're going to be jumping back into their currency, watch out, because the loonie just fell off like 3% in the last 3 weeks. The labor market, factory orders just down. A lot of bad news coming out of Canada.
Every day.
Today, GM in Oshawa. It's about 750 jobs now moving to Indiana. Elbows up, man. This is unprecedented. I worked out there a long time ago, and we know the town really. They need that. They need the GM. They need this.
No, I know, and we'll be gaslit to say, "Oh, we're investing." But you that's the thing about physical gold and silver. I remember listening to Peter Schiff years ago, and it was in his book Crash Proof, where he was talking about, the idea of if you put something on a credit card and you're paying interest versus just saving up for it and waiting for in this case, blue jeans to go on sale, you end up getting it much cheaper, right? It's just this kind of like, just a way of logic and von Mises thinking, etc., Austrian economics thoughts. And same thing with gold and silver. As savers, you're being hammered. There has been a war on savers probably for decades. And the idea that you could be charged, that the government wants you to believe 2% interest every year or 2% inflation is a good thing, where you're losing 20% of your purchasing power every 10 years, 40% every 20 years, and you should be okay with it. Mm-hmm. Right? Now, if you're getting 6% a year, okay, you're mitigating some of those losses, but that's not real world inflation. After 2021, it cannot be denied. The government in Canada printed $300 billion plus, right. It's a ridiculous amount, and it doesn't mean we should be accommodating $70 to $100 billion every year moving forward. We don't have the crisis that you think we have. We have a crisis of leadership, but it's not everybody else's fault, right? So how do you protect against inflation? How do you protect against the war on your savings? You own something that they can't take away from you. And if you have dollars under the bed and gold under the bed, they can print those dollars to infinity. Mm-hmm. They can print them into obsolescence. But they can't do that with gold.
Which has been the case for thousands of years. Paper money intrinsically eventually returns to its intrinsic value of zero. This is nothing new. They will clip your coins. They will cut your currency. They will inflate. They will dilute your purchasing power, all for political gain and all for influence, because we know power corrupts. But ultimately, the saver loses. As we have seen, the currencies have lost over 95% of its purchasing power. We're losing. And do we just sit back idle and watch this happen, or are you going to do something about it? Are you going to actually take action when the bank of, the institution that all banks are following, that have followed, that have generally been the leader, in their calls and their analysis, Goldman Sachs, maybe Morgan Stanley, who have now come out publicly and stated that the way that we've been doing it, guys, diversification of 60% stock, 40% bonds, they said it's dead. It's a thing of the past because they ruined the game.
No. They didn't say it. You said it.
And they heard me say it
2 years ago. Yeah.
Yeah.
And I remember you talking to clients talking about that for years ago.
Well, the Ibbotson Associates recommended the 5%, 7% when there was no QE, no quantitative easing 1 or 2. And, the financial planners today are still saying the same thing. And citing things like the Warren Buffett, gold just sits there. The problem with gold, it just sits there and just looks at you, is what Warren Buffett says. But he also says that the financial weapon of mass destruction is the derivatives market. And I think as a gold holder, you are cognizant that this is a big risk. There is a major black hole, and this is the problem and why the Federal Reserve now is focused on gold, because the problem is coming up. They have to deal with it whether they like it or not. The government shut down. A lot of the debt has to be renewed this year alone. And, this is the reason why things are shifting. They're building a new structure. The money's moving, and we're seeing a good setup play for gold once again.
The number 18778 silver and the website guildhallwealth.com. We have a president in the United States that is in a cold war and sometimes a hot war with the Federal Reserve. What do you think? Do you think the Federal Reserve is going to be around in a year or two?
That's a very good question. Some argue that it's time to end the Federal Reserve, that the Federal Reserve, it's not federal. It's anti-constitution. It's anti-American. It's foreign. It's an institution. It's a building. Whether you like it or not, if you can gut it and restructure it and make it federal, and have the Treasury absorb it, which I think it's already happened, you could correct the problems of old, and you can carry on with constitutional money, sound money that is backed by gold and silver.
You could click your heels 3 times and go say there's no place like home. Speaking of which, my son noticed. He loves The Wizard of Oz, and he said to me 2 nights ago. He goes, "Hey, she's wearing silver slippers in this story. Ooh. In the movie, she's wearing ruby, but in this one, she's wearing silver." And I just, me. I said, "Well, that's because The Wizard of Oz is an allegory for the gold standard."
That's when you
we'll talk about that another time. But I've got an opening there. You see what I'm saying? There's a door opening now. So now I can show him an ounce of gold and see, what's that say on it? And he can look at it and say, "Oh, Oz." I said, no. Ounces.
Right.
Right? I'm just going to slowly.
I like that.
I'm going to slowly groom him.
That's excellent.
Which we should all do. You
have to.
Yeah.
This is the future. I mean, we got to steward these kids. Otherwise, the cancel Netflix culture, where we see what's happening.
Amazing.
Either we do it or they're going to steward our kids the wrong way.
The number 18778 silver, the website guildhallwealth.com. Holding physical gold and silver is time tested. It's been around for thousands of years. It's real money. In fact, in the next segment, we're going to show you just how real it's getting in the market and how it's being accepted again as real money. But if you want to hold physical gold and silver as part of your portfolio, give us a call at 18778 silver. Go to the website guildhallwealth.com. There's been amazing moves in the gold and silver market. We knew it would always come. We do believe that we're just at the beginning, and as you continue to listen to the show, you're going to see exactly why we believe that. But if you want to get involved in the market, if you want to hold some physical gold for ease of liquidity, you can contact us at 18778 silver and the website guildhallwealth.com. We only deal in physical. And the key to that is when you're dealing in physical, not paper, not certificates, not pool accounts, not gold-backed funds, not ETFs, not futures, not options, not even mining stocks. All of those things are investments. Investments have counterparties, entities that you have to depend on to pay you back in the end. When gold doesn't have any counterparties. When you own it, that's it. You own it. Can't be taken from you. None of that David Webb, we're going to take everything that isn't nailed down. This is an actual asset that you own, and you can now putting it into a vault is not a bad thing. That's security. Especially today, when the chief of police or whatever, they're telling you just give the keys to the people who break into your home. Okay, that right there, I don't know if you want to have some physical gold just sitting around your home. It is a dangerous time, and unfortunately, that's the reality of the situation. And storing product is very low cost. Very low cost. It's about 1% to physically store, allocate your product in a secure facility that you can buy and sell on a phone call, go and visit and audit. You have access to go and personally and take it out at any time. Of course, with registered accounts, it would be deregistered. But I remind clients, Jerry, it's 1%. The market's up over 50% in a year. Okay, mm-hmm. You've covered storage for 50 years.
Yes,
it is a nominal cost of doing business, and let's just remind everyone that most mutual funds, et cetera, are charging over 2% mm-hmm. for your management expense ratios, et cetera.
Shuffle that paper.
Yeah, so things are looking good, but what's interesting is you have a stock market that's overvalued. I think many would agree it's overvalued. Would you agree with that?
Yeah, if you look at the ratios, price to earnings, price to book, still overvalued. And we know what has really pushed these things into overvaluation territory. It's the expectation of stimulus. It's the cutting of rates. It's the manipulation. It's not the traditional fundamentals that are causing these valuations.
Yeah, it could be also, though, maybe investment actually is coming into the country and going in. That is a possibility too.
Yeah,
could be a good thing.
Look at the TSX. I mean, it's up like 20% on the year. Some people attribute it to elbows up Carney for doing a good job. I mean, this guy strangled many of the areas that are moving up. We're seeing tech moving up, and we're seeing the resources and mining. These are the top three sectors that have charged the TSX higher. And if you look at the common denominator, all three, there's a lot of silver in all three.
Interesting.
And strangling this market and this industry, we noted Barrick and Newmont decided to leave Canada. So you can't get the pat on the back for this one, Carney. You can get the pat on the back for other things, a lot of other negative things, but definitely not the fact that the TSX is up 20%.
Well, the reason I was asking you is because something that I've been noting with clients is when we're looking at where gold and silver are today, we want to ask ourselves and look into it and research, is it overvalued, fair value, or undervalue? And how do we know where we're at? So silver today being close to $50, and that's a bit more of a psychological number than anything. But to be at $50, we're sitting at an 80-to-1 ratio, right? The Dow Gold ratio is 12-to-1, not 1-to-1. The gold to debt ratio is off the chart, right? In 1980, it was 850 to 1 trillion. Okay, there's 37 trillion. You can do the math. You're looking into the tens of thousands. The Dow Gold ratio, if it was 1-to-1, it would be a $40,000 an ounce gold. Right now, to buy a house, it's not 200 ounces of gold. I'll tell you that. It's a lot more than that, which means on silver, it's a whole lot more than that. You're not talking a couple thousand ounces, which you believe it could go to. We're not even talking 5,000 ounces. We're probably still in the 20,000 plus ounces to buy a house, right? Wages aren't keeping up with gold. Wages aren't keeping up with silver. And what I mean by that is you're not getting paid what you should be getting paid.
And this is what you're pointing out, Jeremy. You're pointing out the difference between you're measuring cycles and you're measuring purchasing power of stuff with stuff versus things like RSI, the relative strength index, statistics and stats coming from the government who are literally gaslighting you with fake CPI data, understating real world inflation. We have to use these cycles because they're cycles. These are cycles that have played out for thousands of years, which lasted much longer than these statisticians.
Absolutely. And at the end of the day, what we're looking at, as just an example, in 1980 at $50, silver to gold ratio 16-to-1. In 2011, it was 35-to-1. We're currently very close to $50. We're at 80-to-1. 80-to-1 is the type of ratio you get when you've had a major pullback in the market, when it's incredibly undervalued, not fair value, not overvalue. And Katuza Research, we put it up on our X, is basically pointing to the same thing, that all we're seeing right now is the market getting off the mat, in my opinion, after years of manipulation. And even if it's not full-out manipulation, which we could get into, maybe we will. We've talked about it before. But it could just be a catch-up to all of the money printing, because you can print, as we just said earlier, you can print 300 billion in a shot. Yep. You can print 100 billion in a shot. You can print 1 trillion in a shot. Gold and silver eventually have to catch up. So just this first initial move is part of that.
Absolutely.
Right? So again, is it undervalue, fair value, or overvalue? We're not even close to fair value on these assets. That doesn't mean it's a straight ride up. There could be pullbacks, but waiting for $18 silver is probably not a good idea.
And this was actually the conversation on X this week. A lot of posts from the pros out there, pros with with asterisks and the quotation, quotation marks. There's a lot of people saying this is the time to get out and take profit on gold and silver. You have people saying the RSI broke above dynamic overbought line. Enjoy the party while it lasts, gold and silver. The music is about to stop. They're both in dangerously overbought territory. And one guy wrote, a crypto analyst says, silver is the most overbought level in 14 years. Another trader says, time to book profits.
So how do you know when Bitcoin's overbought?
A very good question. Who knows? But we know some of the analysts that we follow. Eric Young wrote, anyone who says gold is deeply overbought and overpriced doesn't know what's actually going on. They're flying around blind. Another trader market research said gold's projection is very bullish. It is almost certain we will see gold trading at $5,000 an ounce. But then, do you expect a straight flight? No. There will be breathers here and there, like today on the Thursday after a Fed comment, and newcomers can join too. That's how all the market works. Nothing goes up in a straight line. And another thing, Jeremy, with the silver to gold ratio showing 85 to 1, despite gold and silver both up 46 to 60% collectively, we still haven't had full participation. We still haven't had any of this, true family money coming into the market. Analysts have wrote
in other words, we're still at the 1-2% level. We're not at 10% level like we were in 1980.
Yeah, and that's if you have 1% of the treasury jumping into the gold market, gold would instantly be at 5,000. What about 5%? 15,000 per ounce. These are all forecasts that we are seeing, and if we look at the various cycles that are at play, cycles are pointing a lot higher. With the advent now of silver being a critical mineral, we now have a floor on the silver price. Silver prices are not going down. Lithium and uranium, the two minerals that were added to the critical minerals list, note this, they both multiplied in price. Critical minerals, which need to be stockpiled for national security risks, says the Department of the Interior. We need this stuff for society, for civilization. Let's dump it all into the market. It's not going to happen. They're going to drive this silver price into the multiple levels. If silver follows what lithium and uranium did, silver would be at $144 an ounce, and that's a fact.
When they took it out of the currency in the late 60s, Lyndon Johnson, saying there wasn't enough of it, you look back, you just go, oh my gosh, the gaslighting over the
he said
decades.
Not enough. Cat out the bag.
Cat out the bag. We don't have enough silver.
Oops.
We got to take it out of your currency. And you just said, oh, it's a critical mineral. And then we talked about this several months ago, and we're following the story. Well, guess what? DeSantis approved the law allowing gold and silver as legal tender. Well, if you're going to have silver as legal tender, you better guarantee yourself that it is a security issue at that point, a national security issue, if it's now considered legal tender.
Things are moving in the right direction. This is another building block towards normalization of precious metals back into the North American mindset of what money is. We know money is durable, recognizable, divisible. These are all characteristics of what money should be, and it's constitutional. That's huge news, and it's just another step towards reintroducing it into everyday commerce.
I was thinking the other day as the U.S. Treasury hoard, as they're labeling it now, topped $1 trillion. That earlier in the year there was a lot of talk with Luke Gromen about revaluing gold, because it's, actually the other one is silver's now trading above the price that gold is on the books at.
Yeah.
Gold's on the books at the Treasury of $42 an ounce, and silver's trading at 46. It's just like crazy.
Yeah.
What is this stuff? Just get the product. Just call us 1-877-8-SILVER, the website guildhallwealth.com. We'll show you how to get involved in the market. But Luke Gromen was saying back then, hey, if we revalue it, it'll be worth $850 billion. And I said to you in the office, and I know we got to just start filming these things, but I said to you, I was like, yeah, that doesn't seem like a Trumpian thing to do. I feel like Trump would be like, yeah, 850 sounds good, but you know what sounds better? 4 trillion.
Yeah.
Let's let the price of gold just keep going higher till that treasury hoard, as they're calling it, is not worth, and now it's worth $1 trillion, right? So back in April, it was 800 billion. Now it's $1 trillion. Let it just keep going, and eventually it'll be worth 4 trillion, 5 trillion. That's gold trading at 9,000.
And this is gold. This is their asset on reserves. Reserves is the key thing. The word of the year is reserves. What are your reserves? Are you holding worthless currencies that are constantly being devalued and destroyed over ridiculous money printing schemes? You have to convert and into reserves, away from the hands of a government, away from the banking systems, and undigitize your wealth. And I think undigitization is very key. As Mark Twain once said, I'm more concerned about the return of my money than the return on my money. Very timely as we looked into the international banking. It's crazy that the Vietnam Central Bank that just initiated last week the closure of over 86 million bank accounts starting earlier last month. And I think that was just a devastating headline for many people. I know a lot of people that came from that country who have seen the devastations of the former communist regime there. All the accounts that closed lack the user biometric information, which gives the central bank next-gen financial surveillance ability to prevent quote-unquote fraud. And it's, again, freezing your bank accounts. You're unable to access your right to get your own money that you inherited, that you worked for your own protection, sir or ma'am, to protect yourself against fraud. We're going to lock your bank account. You're not going to access your bank. Now is the time to see the pattern, see the trends. If you haven't yet, you want to give us a call. Let's talk about a little more about how we can diversify your holdings into tier one assets, in the tier one part of your portfolio for the Mad Max scenarios like this, or tier two. Structure your hard asset portfolio for the long term, for generational wealth building, using natural fancy color diamonds, platinum, gold, silver for your RSPs, or take some home, some silver maples.
Real is a good thing. Real is a good thing. And gold and silver are definitely real. And silver's only going to get better because there is a deficit in the market, and the demand, not just from it being legal tender, as Ron DeSantis has put into law, and that's going to happen across the U.S., but also for industry. And we're not talking just water purification or missiles or batteries and solar power and wind power and medical usages, which is off the charts because it naturally absorbs bacteria. I know we're all obsessed with viruses, but bacteria is also a thing. And but also because of new technologies and building out the infrastructure for AI, the processors, the bits, all of these things have silver in them, and the new technologies that can be born out of all of that. And this is about not just in the States. The golden age is not just about drill, baby drill. It's about build, baby build. It's about production and growth and innovation. And all of these things are going to have a lot of silver in it. And I'm not the one just saying this. You know who also said this? Australian mainstream TV.
All right.
Did you hear about this?
No.
On Australian mainstream TV, they did a 2.5 minute pitch for silver, and it was pretty much bang on what they covered. And apparently in Australia now, the retail has been cleared out. That 2.5 minute bit on silver incited an incredible retail rally in the market.
Yeah.
Right?
Selling out the 1 kilo bar, I think it was.
Yeah, it's wild.
Silver,
it's
yeah.
wild. All right, let's talk about Tether, because there's a connection between gold and Tether. And just during the break, Jerry, you were connecting some crazy dots to Tether. But let me set you up. I was listening to an interview with Jim Rickards, and he was saying, well, the issue with Tether is that it's a stable coin. So when you're buying different cryptocurrencies, you need a coin to be in between. You need something that's not fluctuating a whole lot. And so Tether is one of those coins. And what Tether does as a company is they go out and they take the money that you've bought the coin with. They take that money and they buy T-bills. And they get interest on it. But the interest doesn't go to the person who's holding the stable coin. It stays with the company. And then you were just saying that, well, that you think you know what they're doing with the money.
What?
That they're buying something yellow with it.
All roads lead to yellow. Very timely. Very, very timely. We've been following the Tether story, the stable coin story for a very long time. Not too many people know, but Guildhall, we do hold some crypto as well. We're not anti-crypto. We are anti government confiscation through taxation and inflationary theft. So de-dollarizing was a huge theme. So de-dollarization happened, which is brought about the advance and growth of the crypto space, which is great. So we've been following the Bitcoin story and the Tether story over the last year, and we've heard the few stories that came up. We have the Besant Bitcoin Act to ensure that Tether, the largest stablecoin in the world, which is supposed to be backed 1-to-1 with the U.S. Treasury note.
And that's what he said, Besant.
The white paper of the Tether itself says that it is backed 1-to-1.
Got it.
But the question is it? Because we know institutional and commercial trades, they're using the Tether, they print Tether, and then the Tether goes into Bitcoin, ballooning the Bitcoin market up to record territories, up over 100,000 very easily. It's where all the volume comes from. Tether goes into Bitcoin and then Bitcoin back into Tether. But is this Tether really one-for-one back? So we ushered in the Bitcoin Act, opening the books. Is it really one-for-one backed? And that was earlier in the summer. We broke that story. We talked about that. In June, I believe, that story came out. Well, a month later, Tether, the largest private holder, the largest stablecoin rather, became the largest private holder of physical gold during the summer of mid-2025. So it's now holding 80 tons worth of gold. That's $8 billion at the time. Tether is stockpiling.
That's a central bank
It is central
level.
bank. Okay, so now let's follow this story, guys. They were told they needed to be backed 1-to-1. Was there an audit? Maybe, maybe not, but it made them rush
they're
out.
dark.
But they made them rush out. Tether CEO Paulo Ardonio admits the U.S. dollar is losing value under the weight of the debt, deficits, and money printing. That's a problem. And that's why alongside the treasuries, Tether now owns billions in Bitcoin, in gold, treating the yellow metal as the true reserve asset. No longer the U.S. dollar is what he says.
Can you repeat that?
When you have debt.
What did he say?
He said that's why alongside treasuries, Tether now owns billions in Bitcoin and gold, treating the yellow metal as the true reserve asset. They even launched a gold-backed token. This is huge news because we are seeing this happening in the U.S. Over in Hong Kong, they're saying it's going to be the gold blockchain hub of the world. Gold became HQLA in China so that you can blockchain the gold for collateral. Now, if that blows your mind, you're going to want to get in touch. Give us a call, 1-877-8-SILVER, and the website that you know and love, guildhallwealth.com.
We got more to come, but getting physical into your portfolio, whether it's your RSP, your RIF, your LIF, your TFSA, or just holding it directly, there's a lot of room to run. We do believe this market's undervalued, so get involved and hold it physically and own it directly. And you can do that with Guildhall. Again, 1-877-8-SILVER on the website, guildhallwealth.com. But we do believe that we have an opportunity of a lifetime. It's great to see the market up. It's great to see so many happy clients. It's also great to see clients who, a little bit older and they're taking advantage of it. They've had great gains in the market. Let's take a little bit off the table. I had a couple this week, Jerry. They came in, they go, we want to go. We're going to go on a
vacation.
We're going on a
Yes.
cruise next week. I had another client came in last week. He said, we're buying a convertible.
Go for it.
I had another client today. She said, you know what? Yeah, I want to paint. Like, I want to paint. I want to redo these floors. Amazing. We're at this point in time where I believe it's a lot like a restaurant at the turn. You have people saying, check, please. Some people are saying, I'm all done. I'm all in. I'm all out, right? I had a client this morning, 400 ounces of silver. He's doubled his money. Thank you very much. I'm good to go. I'm not here to twist anybody's arm, okay? Other clients are saying, keep the champagne flowing, keep my tab open. I'll be here all night. And then there's other people who are saying, did I miss my reservation? Right? Am I a little late? No, you're not, sir. Your table's right this way.
Exactly.
That's the market.
That's where
We're at a point where the market has done very, very well, but it's still very, very early. And if you've done great, beautiful. Enjoy the money.
Enjoy it.
As we always say, profit gives you options. You don't have a lot of options when something's down 50%. Okay? We have a market that's done very, very well over the last few years. Congratulations to everyone who's been involved. And if you're getting involved for the first time, you're not late. We just did the first turn.
And if you want to sell,
first seating's over. That's it.
If you want to sell a little bit like these clients, go right on ahead. You have the right to do so. We're not going to hold. We're not going to make you feel guilty, like some planners out there are doing right now. I'm hearing some horror stories. Like, shame on you. Shame on you.
Okay,
this is not your money. It's their money.
We just got a few minutes left.
Goodness
So
gracious.
let's jump back to Tether. We're talking about Tether now holds more gold than central banks, although I imagine this isn't is this audited? We don't know yet.
Well, we don't know it. We don't know yet, but I think the Bitcoin Act could prove to be a method of auditing or keeping an eye on it. I think just having an act.
What's the
my
deal?
eyes are on you.
Is Tether in with the white hats?
The way it's looking, Jeremy, I think this is a play where we're seeing moves over here, all in culmination to bring back order. Whether they're with us or not, ultimately it's about restoring something that was lost. I know, it was trust. Trust in systems, trust in people. That's gone down the drain. We cannot do trade any longer with each other because we've lost trust. But guess what? If we build a system where we have vaults across the world, across Europe, across Africa, blockchained, ensuring the gold is there, we can trade again. We can have countries that used to be at war with each other, no longer, who used to not see eye to eye with each other, are now doing business with each other through gold being the foundation of this new relationship.
Peace through prosperity. Let's talk about.
But why this whole thing matters?
We have a whole new game.
Yeah.
Okay, we used to have the drinking game for whenever you mentioned the cup and handle. The new drinking game is, can we go an episode without mentioning Vince Lancy? The answer is no.
No.
But because in his newsletter he talked about Jefferies, and they're seeing some pretty big numbers for gold. So before we go here, let's talk about some big numbers of what's expected in the gold market.
Well, we have cycles at play. Just remember why you're not late to the game. We have just begun the rate cut cycle in the U.S. and in Canada when they start cutting interest rates historically. Over the last 3 Federal Reserve rate cut cycles, silver averages 400%. And remember, we have rate cuts coming up October, December. Forecasters are forecasting 99% chance that these cuts will happen. So bunker down, get your gold and silver in there. You don't want to miss the show. Also, we're in the third cycle of precious metals. The first 2 cycles, again, there are 10-year cycles, 10 years each, from 1970 to 80, 2000 to 2011. Look it up. Both average 1,400%. The third cycle we're in right now started in 2016. We're going to see another third cycle probably by 2026. Gold could end up at 14,000, but we're getting calls. We're getting a lot of overbought call warnings, but a lot of conservative calls too. Vince Lancy, we follow him. He's and he had recently commented on Jefferies, which is a major U.S. investment bank, projecting gold could reach 6,600 per ounce within 12 months. Their analysis points to debt, central bank buying. But Vincent Lancy, who is the writer of the Gold Fix newsletter, says Jeffries is only halfway there. His viral September post, Lancy argues that if you value gold against the U.S. M2 money supply, just like it was in the 1980s, you don't stop at 6,600. You land closer to 12,000 per ounce. His math is simple. In 1980, gold peaked at 850 when M2 was 1.6 trillion. Today, M2 is over 21 trillion. Adjust that ratio, and it should be in the five figures. And so 6,600 to 12,000 to 15,000, 24. We need gold prices higher, whether it be through cycles or revaluation, like the Federal Reserve published. It's going to happen.
Well, 6,000 plus is a medium term outlook.
12 months is not bad.
And if you maintained an 80 to 1 ratio, that puts silver over $80 an ounce. So there you have it. Jerry, thank you for that information. I really appreciate that. I am excited to be an owner of precious metals. We hope that everyone else who's listening to the show is also excited about owning it or the prospect of getting into the market. If you've missed a show, catch us on YouTube, catch us on Rumble, follow us on Spotify, follow us on X. Jerry, again, thank you so much. And thank you to all our listeners. Feel free to reach out to us, 1-877-8-SILVER, the website, guildhallwealth.com. And we can't wait to speak to you next week here on The Real Money Show on 640 Toronto.